Hello, everybody. Update time. I took the day off yesterday because it was my birthday, so I was celebrating. Anyway, what's going on? So, the big story today, at least from the stock market perspective, is the very disappointing earnings by Apple. Actually saw, for the first time, a decline in sales, a decline in revenue. So the stock's getting hit. And initially, the market was down earlier. However, how many of you think that the market is looking toppy, right? Like it's going to go down, like this Apple news? You have to say that the performance of the market today, given the Apple news and actually some other corporate earnings as well, the market's looking pretty good. And that's because it's not going to go down. All right. I'm just going to say flat out, it's not going to go down. And actually, this kind of churning that we've been witnessing now, ever since I called the stall in the market, exactly correct, when we saw the flows start to diminish a little bit, that stall is eventually going to resolve with the market moving higher. In other words, I do not see anything right now in the numbers suggesting that the market's going to top out. Not only that, I don't see anything in the sentiment, in the market psychology that says the market is going to top out. We're not bursting, overflowing with bullishness, okay? I think AAII, which is the American Association of Individual Investors, they do that weekly survey. I think bullish percentage in that survey is something like 33%. Most people are neutral, okay? So we got to see those numbers get way, way more stretched out to the extreme. And like I said, the fiscal flows, they're good enough. They could be better, but they're good enough. So it's going to creep higher. What I like is continuing to sell the dollar on rallies. And really, I guess this brings me to my final point that I'm going to mention here in this video, which is that we're really waiting for the Fed to make its next rate hike. And that's coming. It's probably not going to be today at the conclusion of the meeting. However, maybe they'll indicate in their statement today that it's looking more like May. And if that happens, treasuries go down hard. Maybe you get a little knee-jerk reaction in stocks. Maybe you get a rally in the dollar, but then you want to buy stocks, you want to sell the dollar. So rates going up, that's a positive. That adds to the income of the private sector through that interest channel. And yeah, while it may not be, the best way to do it, we're not getting a whole lot of fiscal, well, we are, but we could be getting a lot more fiscal stimulus. So I'll take a rate hike for sure. That's going to push gold up. It's going to push the dollar down. It's going to push stocks up after probably a small correction. And it's going to put treasuries on a downward path. Finally. And it has nothing to do with treasuries being in any bubble, like so many people have been saying for years. And of course, they've been wrong. That's it for now. See you later, everyone. Bye.